Also, politics has our attention, right, Hey Taylor? And the focus has been, of course, on who Biden's picking to be in his team. And it seems as though Dow Jones is currently reporting that Janet Yellen will be his Treasury pick. So we'll look as to how much she's going to be the safe pair of hands leading at the Treasury, how to cement that relationship between the Federal Reserve and the Treasury, which, of course, has a little bit frayed. That was certainly the news story that was last week. But let's have a quick look at what's happening in terms of the rest of the market, because Mark Haefele is talking really about where risk sentiment stands. And he's saying, look, in the medium term, the positives will outweigh the short-term negatives. And I think this is where really the market is looking. The worries in the short term are kind of getting pushed to one side. Yes, the headlines are disastrous when it comes to coronavirus, particularly here in the US at the moment. But in the longer term, the hope is there that we will get this vaccine, we'll get it quickly, perhaps in the US, and it'll start to pile in. So for the greatest upside potential, he really is saying get exposure to the select cyclical sectors that have lagged so far during 2020. This is all about your rotation trade, Taylor.
Well, let's get right to it with Brent Schutte, Northwestern Mutual Wealth Management Company Chief Investment Strategist, where he oversees nearly $175 billion in retail assets, and joining us from Milwaukee, Wisconsin. Do you too, Brent, sort of look through the negative headlines into that positive, more cyclical, more reflation trade on the horizon?
Yes, I think I've come on the show for the past 3 or 4 months and said exactly the same thing. And so if you look into 2021, the market is discounting a much more holistic economic and market recovery. And so if I take you back, for much of the past few years, actually, the global and the U.S. Economy has been robbed of one cylinder of growth, at least. And so I take you back to 2018, we had a trade war. That robbed the globe of some level of manufacturing. And then we started to normalize a bit towards the end of last year, and the economy was coming back online more holistically. The market started moving higher. Some of those areas that you mentioned before, cyclical, value, small cap, worked for a brief while until we got hit by COVID. And so now you look into 2021, and it's probably the first year in the past 2.5 to 3 years, we have all cylinders of growth operating with the Federal Reserve, with fiscal policy behind us, with the virus lessening its impact on the economy. And you will see earnings growth in areas of the economy that haven't grown as fast as tech has. And that will push those areas forward faster as we move into 2021.
Brent, just to get your initial reaction on breaking news coming from Dow Jones, but reporting that Janet Yellen might well be the person to lead the Treasury Department under President-elect Joe Biden. These sorts of political moves, as you see them, they affect your day-to-day decision-making when it comes to investment?
Yeah, I mean, monetary and fiscal policy serve huge inputs into our process. And so if you think about it, I mean, the Federal Reserve has completely shifted over the past couple of years. They wrote it in stone in September, and they're not changing. Now the market has someone that they're going to probably know very well at the helm in the Treasury, and that person is also very easy. And so I would suggest that you're going to have easy monetary and fiscal policy until there's a reason not to have it. And that reason would be either inflation, a rise in interest rates, or possibly even a dollar falling too much. And that's not on the horizon in the near term. And so monetary and fiscal policy will continue to act as a backdrop for risk assets in the coming year.
Talk to me about that, because we had some notes out this morning, the DXY, and typically sometimes we look at BBDXY, but here we're looking at DXY, and if you break below 92, which it's right at right now, it could be some further bearishness on the horizon. Are you not expecting further bearishness on the dollar?
I am, but that's what we want now. And I guess all these things are until you get too far, right? And right now, we're not anywhere near too far. And I think, most people would actually want the dollar to fall in the U.S., economists at least, to kind of be a backdrop for stronger U.S. growth and rising inflation. And so these things only become a problem when they're a problem, and they're not a problem yet. We want higher inflation. The dollar falling is not a bad thing. But at some point, I bet in the future that I will come on this show and we'll be talking about these things going too far. But I see that somewhere off in the distance, and so I wouldn't worry about it in the next 6 to 12 months.
Okay, so one thing we can put to the side. Meanwhile, we have to suffer the headwinds of course, COVID headlines, which every now and then do seem to take the investor sentiment at the moment. How do you brace through this volatility that inherently we're going to get until the end of the year?
Yeah, I remind people that the market discounts more than a couple weeks into the future, a couple months. And so I do think having that end date on the calendar with now, it looks like 3 possibly effective vaccines defines the bottom. And I don't think the market will sell off too far, because it does see the other side of this, and it sees that being that more broadening growth that we mentioned in the opener. And so the back and forth, I think investors will come in and buy the dips. And I do think you will continue to have the rotation to those names, value names, small cap names, things that are more leveraged to the economic cycle, and quite frankly, things that will benefit as people do go back, at least inching back towards what was normal life before COVID hit.
At the top of the last hour, I was mentioning that triple Cs have been some of the big outperformers relative to other pieces of junk and even investment grade. Does that give you hope that that cyclical trade is confirmed in the bond markets, or triple Cs, the junkiest of the junk, just a further sign of a search for yield that might be unreasonable?
I don't know if it's unreasonable. I think all the above. I think you have the Fed pushing that search for yield in many cases. And it does reflect the fact that the economy is getting better and people are thinking that the future will be brighter. And so, only at extremes, and I know that this could be an extreme, but I don't think so, just given the fact of all the things that I mentioned as tailwinds into 2021. And so it does give me hope that the rotation is real. I still think we have a long ways to go in the rotation. I don't think we're done yet. You're going to see strong earnings growth in some parts of the economy that haven't had it for a couple years. And you're going to continue to see investors who have pretty much hidden out in those stay-at-home defensives, moving out and broadening their portfolio. And I don't think everyone has got the message yet. I think it's just starting to come. I think there are still doubts. And as you move to getting people vaccinated, as you get closer to that April date, hopefully, I think you're going to see more and more people starting to shift their portfolios in that direction. And so I think we're still in the early stages.
Still in the early stages. We love having you on, Brent Schutte. Stay well. Thank you for your time. Northwestern Mutual Wealth Management Company Chief Investment Strategist. Always great to have you.
The biggest stories the moment they happen from around the globe. Subscribe to Bloomberg Quick Take now for insight in an instant.